Treasury Secretary Tim Geithner has been forced to use extraordinary measures because he can't sell any net new debt. The U.S. government is hitting its $14.3 trillion debt ceiling today. Our focus this morning is on the implications of the debt ceiling debate and the threat of a potential default. Jim Kessler is co-founder and head of U.S. policy for Third Way. His latest memo on the debt ceiling describes what might happen in U.S. capital markets and how it would affect Main Street if the U.S. were to default. Jim is live with us from D.C. this morning. So, Jim, walk us through it. What would happen if America ended up defaulting on its debt?
What we did, we wanted to figure out, you hear it's going to be Armageddon and calamity, and we wanted to see, okay, what are investment houses and economists actually saying that would happen step by step? And what we did, and we really took conservative estimates, we found that there would be, likely an immediate rise in Treasury bill rates, maybe half a point, and that would lead to a cascading effect on the economy, lowering the GDP by a point, which would shave 650,000 jobs, most likely, raise mortgage rates. So for the typical person buying a new home, which costs about $190,000, that's a typical new home in America, add about $20,000 to the mortgage, and to a typical 50-year-old person who had a 401k, about $150,000 in that 401k, losing about $8,000 or $9,000. So that is the effect that we found that just kind of gets to Main Street on default. We wanted to kind of put it in terms that people could understand rather than the kind of big global terms that I think a lot of times just pass by people.
Jim, I think that was a good language. Anytime you talk about someone's 401k, that person is bound to listen. What about what this does to the dollar? Does the dollar lose its special status?
Well, I think there's a real possibility that that could happen. And, the U.S. dollar is the reserve currency in the world. It doesn't have to be that way. There are other currencies that will be vying and other metals that will be vying. And, it is the safest place. So you could see selling of the dollar fairly massively, a decline in the dollar. That could be inflationary. Now, there's positive benefits to a declining dollar. It increases exports, but I don't think the United States wants to permanently have a declining dollar. And being the reserve currency is a real benefit for this country.
Jim, all of your predictions, as it were, are based on an anticipated market reaction. What if the market reaction isn't what you and other people think it will be? Some would say, why not test it? We've been talking about it earlier this morning with Jay Powell, a former Undersecretary of the Treasury. Both you and he would fall into the camp that the Wall Street Journal would call the Armageddon lobby. How do you respond?
I was referring to the Stanley Druckenmiller piece. Stanley's a brilliant guy, and look, he may be right. But I think this is the situation. Here's an analogy. Defaulting is like cheating on your spouse. Your marriage may survive, but it'll be irrevocably, it'll be changed forever. The Treasury bill, people will buy Treasury bills, but the relationship between investors and the Treasury bill will be changed forever too. So, I think if I was in the room with Stanley, we could come up with a deficit reduction package that's almost the same, but I don't think we should test to see whether default is the only way to get there.
Jim, to pick up on your analogy, I mean, maybe you're cheating on your spouse, but so is everybody else in the room, and maybe they've done it more times and in a more flagrant way, and then you look the best of the bunch. I mean, maybe the U.S. just keeps its status as such.
Well, on the one hand, you've got you're saying like, well, we can test this because, we're still the strongest and we're the best. But on the other hand, we have a $14 trillion debt that is making investors nervous already and wondering, and saying, like, we've got to do something serious. So we do need to do something serious about the debt. That makes default less of a pretend tactical move because we have such a huge debt already. So, yes, this is an opportunity to get something done. But if you don't get something done, you might cause some real long-term damage.
Jim, thank you for joining us this morning. Jim Kessler, he's the co-founder of Third Way. He says, if you really want to understand the debt ceiling debate, think of the consequences of a default as the same as cheating on your wife. The relationship will be forever changed.